So I'll speak basically on the performance and outlook of the Chinese steel industry. Mike have touched a little bit on the Chinese market. I think that I will use a little more details to explain about the evolution of the steel industry in China this year. So let's talk about, first of all, on some macro indicators. In October, the main indicators of the national economy was still at a reasonable range of growth rate, while the steel-related indicators continued to slow down relative to the previous value. I mean, for the same index in the previous months. From January to October, the national fixed asset investment increased by 6.1%, which is 1.2 percentage points lower than last month. It's also 7.8% from the same period in 2019. So if we, as we always do, we will count the average growth rate for the last 2 years, for these 2 years, 2020 and 2021. So the growth rate is about 3.8% in 2 years. Mike just now mentioned about the real estate problem behind the decline of steel demand in China. It's true, we see the real estate demand investment increase by 7.2% year-on-year, but which is lower by 1.6 percentage points than the value of last month, which is an increase of 14% over the same period in 2019. The 2-year average growth rate is 6.8%. The added value of the industrial enterprises, the large enterprises, increased by 10.9%, while the added value of the large enterprises in October itself increased by 3.5% year-on-year. Anyway, we all see some slowing down of the macro indicators. So we have a particular look at the manufacturing industries and the construction business activities index. We see the composite PMI output index was 50.8%. So it's still in this booming range, but it also registered a decrease of 0.9 percentage points from the previous month, indicating that the overall expansion of production and operation activities of Chinese enterprises slowed down. So if we look at this, the business activity index of the construction industry, which was 56.9%, again is in the expanding range, but down 0.6 percentage points from last month. Again, it's still a high figure. It's still in the high range, indicating that the construction industry production still maintaining in a continuous growth momentum. This is a chart we use for our monthly analysis. So we look at all these downstream steel using industries. The construction industry, which are accounting for 55 to 60% of the steel use, while the manufacturing is about 30 to 35%. So the red color means it's like a positive growth rate, while the green indicating negative growth rate. So we look at this, the real estate. The newly started construction area, which is very important to the steel use at the moment, and also steel use for the coming weeks or months. You can see the slowing down trend is very strong. So you can see in October is already minus 33.1% year-on-year. Land purchase area is also indicating future steel use, which is minus 24.2%. Of course, you can see there's most of the indices are in green, which is not good. There's only metal smelting equipment, which means the steel or the non-ferrous industries investment itself is still posing a positive growth. The other three growing sectors are like shipbuilding, and also there's container building industries. But again, the shipbuilding and container building, they don't use a lot of steel. Look at the real estate itself again. That's the main indicators continue to decline from January to October. Among them, that's investment increased by 7.2%, construction area increased by 7.4%, commodity residential housing sales area increased by 7.3%. Anyway, that's we can see that decline is very obvious. Also, if you care about the Chinese steel market, you know about some stories about the Evergrande, one of the biggest real estate companies in China, were hit with financial distress. But good news is they have passed the most difficult time. So we hope that in the coming months, things will a little bit calming down. For the automobile industry, from January to October, production in China increased by 5.4% and 12.2% month-on-month. The production in October is 2.33 million vehicles. The decline is declining, but the declining rate, year-on-year rate, is narrowing. Just now that we mentioned about that's the chips, the tight supply of chips at the moment seems somewhat relieved. So that's I also agree to Mike. Maybe that's in December or the coming months, things will be more comfortable for this point. In October, the production automobile sheet fell by 18%, and the accumulated increase was 12.4% year-on-year. So we have a general view or overall picture of the Chinese steel production. For the figures is for the first 10 months. We see for hot metal pig iron is we see there's a decrease of 3.2% year-on-year. Crude steel 877 million tons is a decrease by 0.7% year-on-year. For steel products, there's a still increase of 2.8% year-on-year, but you know that that's double counting. So that's the figure we should trust is crude steel and pig iron. For iron ore, here I mean that's the iron ore produced domestically in China. We have an increase of 11.53% year-on-year. So that's the basis is not very large. Steel production, we can see in October was 71.58 million tons. That's a quite obvious decrease of 23.3% year-on-year. The production of steel products is still high, but we also see a decrease of 14.9% year-on-year for the month of October itself. The crude steel daily production has been declining for 6 consecutive months and hit a low for 4 years. So in October, the crude steel daily production was 2.31 million tons. It's a decrease of 6.1% month-on-month. As I just mentioned, is a 4-year low at the moment. Let's have a look at the import and export situation. It's true that this year, the situation varied quite a bit. From January to October, the total steel export stayed at 57 million tons, which registered an increase of 29.5%, while the import was 11.84 million tons, representing a decrease of 30% year-on-year. The monthly export of steel in October was 4.497 million tons, which is 423,000 tons lower than the last month. So the imports also there's a registered decrease, but at a smaller magnitude. So as you may know, starting from August 1, China raised the export tariffs on ferrochrome and high purity pig iron and implemented export tax rates of 40% and 20% on them. In the meantime, we canceled the export tax rebates for all types of steel products. So we can see the total export is still high, but the monthly steel export is decreasing for 4 or 5 months already. For apparent steel consumption, from January to October, it is 840 million tons, a decrease of 3.5%, declining by 2.6 percentage points faster than last month. We also talk about a little bit on the iron ore, because iron ore is a very hot topic for the year. Imports of iron ore in October was 91.61 million tons, down 14.2% year-on-year. For the first 10 months of the year, the imports was 933 million tons, also down by 4.2%. The domestic raw ore production, as I just mentioned, is in October. For the first 10 months, there's an increase of more than 11%, while for the single month in October was 2.8% decrease year-on-year. For the iron ore price trends, that's we can look at some like the index. We also look at the inventory at the ports. At the present, the port inventory exceeded 150 million tons, which 178 ships, I heard from my colleagues, they're still waiting for unloading. So the port inventory in 2019, the peak point is 148 million tons, while the historical high is in 2018. It was 161 million tons. So with all this inventory, that's we hope and we believe that the iron ore price still have room to go down. So I talk a little bit on the coking coal, coke, and scrap scenario. The coke production in September was 37.18 million tons, down 9.6% year-on-year. For the first 9 months, it increased by 1.3% to 357 million tons. We also see the coke exports increase in this year. For the first 9 months, we see the coke total export stayed at 5.17 million tons. It's up by 99% year-on-year. The imports of coking coal in the first 9 months of the year was 35 million tons, down by 40.8%. The biggest contributor to this decrease is the import from Australia, decreased from 31.6 million tons in last year to 0 this year. In October, the consumption of steel scrap for BOF steel making in the key enterprises which is many CISA members, was 156.6 kg per ton, an increase of 4.2 kg over the previous month, or 26.7 kg over the same month last year. For the first 9 months of the year, that's China imported not more than 500,000 tons of steel scrap, which we have put a new lifted the duty, the control of imports, but it seems that the effect is not so positive, not so encouraging. So finally, I see something about the overall situation, market trends. The overall performance of China's steel industry in 2020, we think is a good year. The price is good, and the profits of the most steel enterprises is also good. We achieved a very good situation with reduced quantity, but improved quality, which means higher efficiency. If we look at the figures for the first 10 months, based on that, the annualized steel production will be about 1.03 billion tons, and the steel consumption will be about 990 million tons. So, which is a little bit lower than the World Steel forecast, which Mike Fujisawa mentioned in his speech. From the downstream industry point of view, the real estate industry, by the housing for people, do not for speculation. So there's many policies issued. So we hope that the market will stay stable, though there's still some downward pressure for the coming quarters, while infrastructure investment will maintain steady growth. So overall, the steel demand in China, we believe, will fall slightly year-on-year in this year by around 3%, while steel demand will remain roughly at the same level in 2020 of this year. After stimulus policy of dealing with the new COVID-19 pandemic and promoting economic recovery has achieved the results, we believe that things will come back to normal for future steady development. So the demand for steel, not only in China, but also from the globe, will inevitably go back to normal demand. So during the 14th five-year plan period, which means the coming 5 years, we think China will continue to maintain its position as a center for steel production and for steel use. So we think that total steel consumption will remain at a high level. I'll say something about also about the carbon peaking and carbon neutrality for the last several slides. So carbon peaking and carbon neutrality is a very hot topic for all the energy-intensive industries. It's particularly true for the steel industry. So this is the roadmap for China. It's like we announced that the targets for carbon peaking and carbon neutrality. So by 2030, that's all China will reach carbon peaking. The CO2 emission will be decreasing by 65% over the level of 2005. So by 2060, we hope that we can achieve carbon neutrality. I will say also something about this, the measures taken by the Chinese government, the ministries, and also by the industries to deal with the carbon peaking and the carbon neutrality goals. So like in December 2020, the Central Economic Conference, the first time included carbon peaking and carbon neutrality in the key tasks for 2020, and asked all the departments to formulate a carbon peaking action plan for 2030 and to support the qualified regions and industries to take a lead in reaching peak. On December 28, and also that's early this year, the Ministry of Industry and Information Technology, they repeatedly mentioned that the steel industry's production reduction is an important measure for China to fulfill its goals of carbon peaking and carbon neutrality, while the steel industry is also one of the key industries to achieve carbon peaking before 2030. So for China Iron Steel Association, we, in conjunction with our steel enterprises members and also some research institutes, we have set up a low carbon work committee for the industry. And we call for the whole industry to take on new low carbon journey to promote low carbon action initiatives in the steel industry. Steel companies, they also taking various measures to reduce carbon emissions. Like China Baowu Group, they indicated they will achieve carbon peak by 2023 and carbon neutrality in 2050. HBI's indicated they will peak carbon in 2022. The measures taken by the enterprises will include many technical initiatives. China Baowu also they established the Global Low Carbon Metallurgy Innovation Alliance. They commend this ceremony or this meeting on November 18th to mark the setup of this alliance. The other steel companies like Bottle Steel, Changyong Steel, and many others, they are also actively exploring the establishment of hydrometallurgy demonstration products. This is a very rough roadmap for the Chinese steel industry to go for low carbon green development. So we start from the left to the right. From the left, that we try to recover residue energy and to recycle iron resources and to reduce the use of water and gas. So in this steel manufacturing process, the coking, sintering, iron making, steel making, we all have a lot of technologies to use, while which is many of them is like for that best available technologies on the market today. Of course, there's hydrometallurgy is also fit in the middle part. For the right part, for the products, we try to produce high strength, low carbon steel. So in the using sector, they can use less steel. So this is like in a more detailed roadmap for carbon peaking and carbon neutrality to explain the last slide page. So the direction is mainly that's the main areas which we'll work on for carbon neutrality. The second column is the path, and the third column is the specific measures. So the direction means including structural optimization. We mean that we'll optimize the structure of raw materials, which means we use maybe more scrap and less iron ore. We try to optimize also energy structure to have more clean energy, to use more like wind and solar power, also power for biomass. We try to optimize the process. So the second main direction is to increase energy efficiency, which including interface technologies, secondary energy resources, and also efficient power use. Then the low carbon breakthrough technologies innovation, which means the low carbon technologies such as hydrometallurgy and non-blast furnace smelting technologies. Then that we try to advocate multi-industry low carbon cooperation. We try to coordinate with, work with the building materials industry, with the construction chemicals industry, the machinery industry, agriculture, and the whole society. We try to, our waste may be their feedstock. So we try to have a more optimized cycle of all these minerals or the waste used or produced in the steelmaking process. Then we go to intelligent manufacturing. We try to use, we call the smart manufacturing. With this, we can have a more efficient production of steel, so to save energy. Then that we have growing carbon steel consumption. So we try to produce high strength, more flexible steel in order to reduce the use of steel in the downstream sectors. But again, that's for the carbon peaking for the Chinese steel industry. That's we also feel there's many difficulties, which is maybe true to many other steel industries in the world, but it's especially true for China for this intensity and scale of steel consumption. The second is we have insufficient metal reserves, like the US or EU or Japan. The total inventory of steel in the society is high, but China is still not so big. Three, China steel industry, we have to deal both with pollutants and carbon emissions in the meantime. Fourth, there's breakthrough low carbon technologies. There's many difficulties. We talk about hydrometallurgy, we talk about microwave oven sintering, but there's all the ideas at the moment. So it takes a lot of time and a lot of money to really have the final results. So having said that, I have finished my presentation. Before I go to the Q&A, I will say that I'm today president for MIP, which is Metallurgical Industry Press. We do produce a lot of books, about 700 books every year, including 20 or 30 books in English. We also produce some annual reports for the Chinese steel industry. So if anyone wants to know information on these aspects, you're welcome to contact me with my email address. Thank you.
Thank you very much, Jim, for your presentation. It was very, very informative, really appreciated. Ladies and gentlemen, now it's time for the Q&A session. Let me remind you that in order to send your questions, please do click on who is attending section at the bottom right-hand side of your screen while you are in the virtual conference room. You will need to click on the exhibitors and then the conference room option when it appears to type in and send your questions. We have already got a couple of questions. Jim, let me start. George Pearson, one of our speakers in the next session, asked this question. A loss of 31.6 million tons of coking coal imports sounds like a lot. Is domestic production able to make up that amount to meet demand? And if not, do you think coking coal prices will be structurally higher than in the past?
Yeah, it is a lot because the total import is generally around 70 million tons. But in China, we do have a large reserve, and we have a large production capacity for coking coal. So also we try to diversify our import sources, like we have increased our imports from Mongolia. Also, that's we have increased our production domestically. Anyway, though the coke price was very high this year, but I haven't heard any steel company. So they are complaining the price is high, but they have not complained. They cannot buy coke on the market. So I believe that's, I would say that's, we can manage the situation.
Thank you. Let me ask another question on the raw materials, if you don't mind. You have mentioned that when you were talking about the process towards carbon neutrality, you mentioned that China was had insufficient metallics, particularly in recycling materials, scrap. Let's put it that way. We all know that the scrap generation in China is actually huge and it's growing fast, but I understand it's still insufficient for the industry. What is your prediction about potential scrap imports in the coming years? Would it be needed?
Yes, because this year it's forbidden to import scrap for some time, for some years already. So this year we formulated a new standard for scrap. We call it secondary iron, ferrous materials. Anyway, it is scrap. It's not dependent on China. We do need, and we would also like to import more scrap. But again, it's because it's market economy. It's like it's a matter of price comparison. So if between scrap and iron ore, so if the price is not justified, we will not see a lot of scrap imports, which is a situation also for this year. So we hope we can import maybe several million tons of scrap, but finally we only have achieved not more than 500,000 this year for the first 10 months. That's again, another factor is like the policies with other regions which generates scrap. Like the EU is said they will forbid scrap export due to the carbon considerations. So I personally, I don't think the Chinese scrap import will see any real substantial increase in the coming short time.
Thank you very much. There's another question from Mr. Ahmet Eren Büyükçoban. His question is, what do you think about China-Australia relations? I'm sure you don't want to get into the political side of it, but let's talk about trade relations.
Yeah, I have been working for international cooperation for almost my whole career. So I personally advocate free trade and international cooperation. We need iron ore. We cannot produce as much steel as we need without Australian iron ore. So it's a fact. And I think the same thing also true to Australia. They live on iron ore, so they will not find a big customer which can consume as much iron ore if they don't ship to China. So I would say that's iron ore trading will be some kind of backstone for the China-Australian trading relationship. I'm confident. I'm positive.
So sorry, I couldn't hear that.
Yeah, I'm positive for the China-Australian trade relationships.
Thank you. One more question about, once again, during the process towards carbon neutrality. It is obviously, as you have mentioned, it's not an easy process for a huge industry like Chinese steel industry, which is predominantly based on iron ore, coking coal route, I mean blast furnace route. Do you think during the process the Chinese steel industry would need to have some help from semi-finished imports or maybe basic pig iron imports?
It's a new phenomenon. There's because China tried to achieve carbon peaking, carbon neutrality, so that's the government set a target last year to have steel production decrease this year. So anyway, it's good. I mean that if we only consider carbon neutrality, carbon peaking, it's good to import a lot of semis. So that in the coming months or quarters, we'll see more semis import. Maybe not more than 2020, but more than the years before. But personally, that's I don't believe it will be a very big amount, not as big as what we export of finished products. Because that's when we talk about carbon neutrality, we also have to care about employment and also economic contributions to the whole country.
Sure. Thank you very much indeed. There's one more question, but it's rather a technical one. Maybe we can skip that. So it looks like we have no more questions on the market side. So, Sheshe Cem, it was great to have you with us today. We have really enjoyed and benefited a lot. Really appreciated your presentation, all the information you have shared with us. Please take good care of yourself. Stay healthy and safe. Hope to see you in person as soon as possible. Sheshe, 再见.
Thank you. Bye.